Thanks very much. So we have the Demon Fossil Fuels to talk to you about to finish off the session. Jade Gas has coal seam gas assets in southern Mongolia, and the Mongolian government is our joint venture partner, and we're just about to commence our first gas production program. It should be completed by Christmas. The wells will then be put on production, and it's unknown as to how long the wells will take to come into gas production. But it'll probably be around 3 to 6 months. The largest risk for us going forward is our implementation risk, that is drilling 1 kilometre long lateral or horizontal wells into coal seams at depths of about 600 metres. We've mitigated that risk, and I'll explain it a little later, by bringing in the Chinese contractor to do the work. The Chinese contractor not only won our tender for the work, but when they looked at the project, they've entered an MOU with us to fund the next 20 production wells, so they like what they see. The very different thing about this southern Mongolian coal seam gas project, it sits in the middle of the Gobi Desert, southern Mongolia, about 200 kilometres north of the Chinese border, and not a place where you think you'd find a gas market. And as you know, whether you're finding minerals or hydrocarbons, quite often you find them in remote locations where it's very expensive to produce and deliver the product to market. Within our immediate area, we have a huge market for LNG replacement of diesel engines, and also for baseload power generation for mining sector, but also for underpinning the renewable projects. We're in negotiation with infrastructure partners to fund LNG plant and power stations and the like. I don't know if you know, but the coal seam gas projects in Queensland, where there are 2 export LNG terminals built in Gladstone, up to about 2021, they'd spent about $65 billion in the gas gathering system and the construction of those LNG projects. Our project doesn't have anywhere near the same gas resource that those projects are building on, but even 10 or 15% of that type of number means that there's quite a large downstream infrastructure project for us. Mongolia's got 3.5 million people, half of which live in the capital Ulaanbaatar, which is about 600 kilometres north of our project. Believe it or not, it's a stable democracy. They've just had some federal elections, and the country relies, Ulaanbaatar anyway, on domestic brown coal-fired electricity generation, where there are 2 power stations. Our Cavern Tolgoi project is located about 600 kilometres south of the capital, but it's only 5 kilometres from the largest export coking coal mine in Mongolia, the Tavan Tolgoi project, which is run by the government. We're only 5 kilometres away from that mine. There is a town in the area which services the coal mining industry. There are 2 other major coal mines in the area, one by Hong Kong, run by Hong Kong listed Mongolian Mining Corporation, and the other one by the B&G project, and the other one, the 2 mines are run by Mongolian Mining Corporation. We're only 130 kilometres from the Rio Tinto Oyu Tolgoi coal mine, where there's 500 kilometres of underground road, 14,000 people on site. It's a huge operation, consuming about 300 megawatt hours of electricity each day, which is all imported from China. It's coal-fired power. We're also only 60 kilometres from Zhejiang and Xanadu's Karmatagai project, which, if anyone was at IMARC yesterday, would have heard Colin Moorhead present on that project. We've also got a LNG refuelling station about 6 kilometres away from our project area, and as I said, we're only 200 kilometres from the Mongolian border. So the gas resource itself, it's located in Permian age coals, and from a geological point of view, the Permian age is very important. It's the first appearance with the Carboniferous of land plants, so we've got massive coal seams developed around the world in these age rocks. The Bowen-Sydney-Gunnedah basins, which are being actively exploited for coal seam gas in Australia, are in Permian coal, as are most of the coals in India and South Africa. Our gas field, from drilling that we've done and seismic work, covers an area, at the moment it's open at either end, but it covers a stretch of about 40 kilometres long. We've drilled 20 wells into the project, core holes, and we were preceded by 8 core holes which were drilled by a Korean company, KOGAS. And there are literally hundreds of coal core holes that have been drilled in the area as part of the assessment of the coal resources for mining. We also supplemented that with seismic data. So we have a pretty good handle over the distribution of our coal seams. We have multiple seams. They occur from outcrop on the surface to about 1,000 metres depth. Not all of the coal seams contain gas, but a goodly proportion of them do. They're thick gassy seams. Our thickest coal seams are up to 40 metres thick. They have very high gas saturations. The gas is held in the coal by water pressure. I don't know if you realise, but the normal pressure in the earth below the water table is actually the weight of the water. Water is incompressible. It's not the weight of the rock. And it's that water pressure that holds the coal on the molecular structure of the gas on the molecular structure of the coal. So to release the gas, you need to drill a well and release the pressure around the wellbore so that the gas can break free. Once the gas breaks free, it's more mobile than water, of course, and in production, and the gas shuts off the water, and you'll get a well that could produce for 15, 20 years. You obviously have a peak production early on and then a very long productive tail. So these coal seam gas wells can be very profitable, assuming that you've got your market and you can sell at a good margin. Believe it or not, Mongolia is actually a net importer of energy, even though it's got huge coal resources. There's a heavy reliance of energy imports in the south from coal-fired power from China, and all the LNG and diesel in the country is actually imported from Russia. As you probably know, Mongolia is bordered by Russia to the north and China to the south. In the last 18 months, Russia has withheld the distribution of provision of diesel to Mongolia on 2 occasions. And of course what happens is, because there's not a huge supply, the mining sector has to shut down until the diesel is redelivered. So there's a real opportunity for us to replace that diesel with LNG. I mean, diesel engines are gas reciprocating engines, they're piston engines. Methane-driven fueled engines are just the same. They're just a modification on the diesel engine, so it's not high-level technology. Now, Mongolia obviously wants to be self-reliant on energy. It doesn't want to rely on China and Russia, so it's got a big push to try and become self-reliant. It doesn't really want any more coal-fired generation. It wants to stay as a clean environment with the demonisation of fossil fuels by the United Nations and other groups now. It's led the driven to subsidised intermittent renewable projects. But of course, those projects need to be underpinned by a baseload supply. When the sun doesn't shine, the wind doesn't blow, then you don't have any electricity. There's not sufficient storage capacity around at the moment, technology-wise, to underpin it. So you need either coal, nuclear or gas to underpin that supply. That balance is normally in the range of about 70% baseload supply to 30% renewables. So natural gas in Mongolia is really the only fuel that's going to replace to underpin the renewable projects. But our big gas markets really are LNG replacement of that. LNG is liquefied natural gas. It's purely liquefied methane. Replacement of diesel engines. There are over 18,000 long haulage prime movers in the region immediately surrounding our project. They're hauling coal each day down into China, 200 kilometres down into China and 200 kilometres back. They are fuelled by diesel at the moment. So we have a huge market opportunity on the doorstep. There is that first LNG refuelling station, which is using LNG imported from Russia to fuel the trucks. And if you look at anywhere in the world where you have a ready source of natural gas, and prime example is down in China, about 1,000 kilometres to south of us in the Qinghai Basin, you'll find that all the prime haulers that were originally diesel have been replaced by LNG. So that they're fuelled by methane rather than the diesel. Of course, within our area, there are multiple mining operations right around our border. We've got 120 kilometres away, we've got Rio's Oyu Tolgoi copper mine. We've got Xanadu and Zijin's golden copper mine. We've got the coal mines around us. And there's over 500 megawatts of electricity demand in that area already, which, as I said, is being supplied out of China by coal-fired power stations. So in terms of marketing, we've signed MOUs, they're non-binding MOUs, with UB Methane, which is the largest importer and distributor of LNG and natural gas in Mongolia. They're also one of our largest shareholders and have provided us with a convertible note to implement our production drilling program. UBM's intention is to actually to be the leader of the corporation that's going to lead the displacement of those diesel-fueled trucks in the Tavan Tolgord area. We also have an MOU with Hong Kong-listed Mongolian Mining Corporation, which also owns coal mines in the area surrounding us, who have a similar aim to replace the diesel and black coal-fired electricity generation. Now, going forward, our big aim and big push with the Mongolian government was that we've done this type of work here before. I mean, I was a founder and foundation managing director of Eastern Star Gas with a Narrabri gas project, coal seam gas, which still hasn't been developed, by the way. We listed in 2001, raised $10 million, developed the project to the stage where Santos paid $1 billion for it in 2011. They then sought approval to develop the project in 2014. And of course, with the green tape, that project's still sitting there. Eastern states of Australia have a dwindling gas supply. Gas prices have gone up, but government does nothing about pushing those projects forward. We're looking at doing a similar thing with Jade Gas in Mongolia. Our share price at the moment probably reflects where it should be because we've been inactive in the last 12 months. So, but we do have great growth potential, and we're not, as you can probably tell by the colour of my hair, not looking for career positions and achieving long-term, short-term benefits and long-term benefits as executives finally have. We just want to make some money, get knocked off, and make all shareholders happy. So, so when do we think that'll happen? Well, the key for us is actually implementing this production drilling program. And as I said, that's our greatest risk, the drilling 1 kilometre sections of hole through a coal. We took our knowledge my knowledge anyway, out of the Gunnedah Basin in New South Wales, and our senior executive have worked with coal seam gas projects in Queensland, and it was a big sales pitch for us with the Mongolian government that we've done it before. And as we went forward, it became obvious to me that across the border, you've had the Chinese that have been exploiting coal seam gas for the last 25 years in this Kinshi Basin. As only the Chinese could, they've drained every molecule of methane out of each coal seam. But not only that, in the process of doing that, they bought a whole bunch of equipment from Australia and the United States, and of course they've modified that equipment and taken it to absolutely new levels. They're drilling and completing wells at 2,000 metres in 2 metre thick sub-anthracitic coal seams and producing gas at commercial rates, something that's unheard of here. The wells in Queensland that are horizontal wells into the Permian coals we're looking at are doing now just around 1 million cubic feet a day of initial production. I mean, the Chinese have been doing it for decades. They truly are amazing. So we brought on board a mate of mine, Ian Wong, who is an Australian national, born and raised in China, and worked for 15 years in the Kinshi Basin and had all the contacts with contractors and suppliers in that area. So when we went out to tender, the winning bid was a group out of China called DWK. And, they've got lots of experience in drilling and completing wells in the Kinshi Basin in China. They also offer a sort of cradle to the grave contract. Originally, we contracted Major Drilling to do the drilling, Schlumberger to do the steering and the wireline logging, another contractor to run the casing, and another contractor to run put in the surface facilities and gathering systems. And of course, what happens when something goes wrong, they all point fingers at each other, as you know. So what we've done is we've got an integrated service from DWK where they'll drill the well, they'll do everything and deliver us a completed product. And given the experience that they've had down there in the Kinshi Basin, we just think that this is the best thing we can do to minimise our risk and exposure financially. So we're moving ahead. We've started that program. We'll have our first wells in and online before Christmas. The wells, we're going to drill up to 4 wells laterally, only 150 metres spaced apart in the subsurface. The reason for that is to accelerate the gas production. We don't want to be waiting forever, because our big key going forward and the big uplift in value is actually demonstrating that we can drill and complete wells for commercial gas production. A well that will produce, say, 350 or 300,000 cubic feet of gas per day. Because on the back of that, we will then get independently certified gas reserves, which then means that we can move into sales contracts for the sales of that gas. The fact that we have such an extensive drilling already of core holes, and we have our seismic data, means that we may only have a very small proven resource, but we'll have a much larger possible resource which we can then enter into these contracts with. So, of course, on the back of that, as I said, with the big projects in Queensland, with so much money being spent on the downstream facilities, we've been approached and are in quite serious negotiations with several downstream players to provide the capital and the expertise to build the LNG plants and the power stations. So, you know, as a company, I'd look out and see what happens with us over the next 3 to 6 months. You know, it's time for us to have our big uplift. It's really a matter of when, not if. This project, I mean, I'm convinced that it will go ahead. We've got all the key ingredients. We just need now to implement this program. Thank you.